The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hey everyone, Basil Chapman. I'm back here today after my all-day webinar yesterday. My voice is actually here. Isn't that amazing? I thought that I used to do 3 days in a row of 7 hours or so non-stop talking. I think I paid a penalty for that. Meantime, back, if you listen to some of the politicians, remember when Clinton went on the road? It took a long time. In fact, for many years, his voice got kind of scratchy from that. I've listened to a number of politicians who've done a lot of talking on the road, and it does something. So I feel that I got away good. All right. So within the context of what we're looking at here, the Dow today is down 14 points. It's been up, it's been down. It's been up, it's been down, it's been up, it's been down, and now it's a little bit down. And what you can see here is that there's a very narrow trading range, and this 200-period moving average right here, this orange-colored moving average right there at 24,692 in the Dow. That's the resistance. And the Dow needs to not just go above it, it needs to go above it in such a way that it takes out a really important left side. This is what we studied throughout the day yesterday in all the different time frames, in all the different charts. Didn't matter what it was, whether we switched from the E-mini S&P futures to the SPY to the whatever it is, it doesn't matter. It's the same principle. V-shaped patterns or cup formations, arch formations or inverted Vs. So you just get either a cup, a semicircle down or a semicircle up, or a straight line. Basically, that's what you're looking at all the time in the market. In fact, to show that, let me just do this. Take 1 second. Look at this. This is the 2-minute chart of the E-mini. And all you've done, look, yeah, just semicircle. Actually, this one could even go from here, from that peak D. Remember, Chapman wave, always looking for Ds. Doesn't mean that you can't go higher, but Ds are where other things can happen. Peak D, pullback. Peak D, pullback. Peak C, minus, because it went underneath the starting point over there. And that is unusual to make a new recovery high like that and go to a C minus, but the MACD fails, stochastic failed, pulls all the way back down, cup, an arch formation, starts a cup formation, goes to another C, hasn't failed yet, but it is holding its 200-period exponential moving average. You know, it will follow this during the day, during the session. A lot of learning to do. And thank you for those people that attended yesterday. I felt on my side that I accomplished everything that I wanted to do. I found 4 pages of my given notes that I always give that I hadn't actually read, although we covered it during the session, but I didn't formally go to the actual titles of the slides. So 4 pages were missing out of 6 or 7 hours of talking. So yeah, and thank you very much. I did get quite a few responses. People said, let me just do this right now. It'll be nice just to do that. Someone from, let me see. Here we go. Someone from Norway, second year, did it the year before. At the end of the year, I had one. So he did it a year ago, and it helped him a lot. He had a really successful year. And here he says, just wanted to say thank you for the webinar yesterday. That was by far the best webinar I've attended in this subject. How 7 hours can fly by so fast is rather special, fascinating. And then he goes on about what he learned and what the discovery process, etc. Another one I got was, hi Basil, just wanted to say thank you for the webinar today. This guy I received last night. It was exactly what was needed. I will send off an email if there's any question I can think of. Still processing for now. And another one said that it was a review from someone who's done all my webinars right up to level 3 and still wanted to come in because there's always this refresher course that just takes you to a place that kind of says, oh, I forgot about that. Oh, look at that. Or this is now pertinent. I was looking at the wrong thing, whatever it is. So it felt that it was really helpful. And that to me is great. That's the only reason why I do it. And, you know, all of us here at TFNN, we probably do a lot of other things. This part of it is what we do both for fun. For me, it was education. When Tom invited me back in 2002, I think it was, to join TFNN, I said, if it's educational, I'm in. He said, it's educational. I said, I'm in. And that's the way, you know, this is, to me, it's really important. I love teaching. I love to go through the process. I love to make the mistakes. I don't love to make mistakes. I love to make the mistakes that allow me to learn. It's only a reason why you want to make mistakes. And to not repeat those mistakes, or at least to try not to repeat those mistakes. So it's very important here at TFNN. All right, let's get to the numbers. So anyway, it's still archived. So if anyone's still interested, yes, it was great doing it live, but that wasn't the point. The point was that you've got a process. The reason why I like to do it live is because if I do a webinar right now on everything that's been, there's no way that I'm wrong. I have to be right. I mean, everything. Look, I'm looking at this now. I'm going to say the 2-minute E-mini went to a peak C and then it failed. How can I be wrong? It's there. But what happens next? And that's where you need all your skills, right? That's where you want. That's what you want. So you'll be looking at it, and you're looking at it in history, but it's the patterns that we studied. It's the way we went about the patterns, how we use the MACD, how we use the stochastic, why I'd say the stochastic at 90% is really strong. Above 80% is good. Above 90% is really good. In the 95% area is fabulous, and that's where it was, going up to the peak D. Now it's taking a bit of a breather, but I still think we have enough energy just to normally make slightly higher highs. Dow is down 21 at 24,554. The S&P, SPX. Oh, don't forget tonight, Steve, this afternoon, Steve Rhodes is doing a webinar. You know, Steve absorbs all this material, puts it together, makes his own decisions, and comes up with very interesting techniques that he discusses here, techniques that he teaches. So this webinar should be very good. 2640.97 on the E-mini, on the S&P cash, up 220. Somehow or other, with the MACD and stochastic so good, I don't see any reason why there shouldn't be just a nominal new high above 2675.47. We'll see. The market is the market. It doesn't know that it needs to make a leg D in the Chapman wave methodology. But anytime the support at 26.32 to 26.28 should be very strong in the short term. Now let's go to the QQQ one, the NDX 100 trading vehicle. It went to a peak D. That's what we always look for in the Chapman wave. The Dow and the Qs have now gone to peak D. Doji high at 166.02. Really good support. Remember that 14-period moving average. Look at that great support level. It's holding above the 9-period moving average. It's not great. It's up 6.67. Now, this is going to be very interesting. I'm going to interrupt here because the S&P, the SMHs are skyrocketing up 5.97%. We were lucky. We went short the other day at the open 3 days ago, got a fabulous move down. So when all those earnings came out, and I'm going to talk about that in a moment, late yesterday afternoon, Applied Materials, Lam Research, this said to me that it's a year that they've been consolidating. Maybe they're starting to form some kind of support here that's really important. So smashing in the SMHs from 114 down to 80, I would say that's a pretty big hit. And now it's running up to 95. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. So the Qs are up 0.79 at 162.94. They have been helped a little bit by the semiconductors, but to tell you the truth, I'm a little surprised that the semiconductor index is up this much. And it really hasn't impacted the market as much at all. I thought I wasn't interested in how many stocks in each index. You got Intel in the Dow. how many stocks would be adding to whatever it was in the different indices? It was the fact that the semiconductors, my expression for a long time, semiconductors can lead on the way up, they can lead on the way down. And they certainly did that. The New York Stock Exchange made its top in January. The semis made their top in March. Isn't that very similar to what we saw in 2000? Dow makes its high in January. Semis make it high with the S&P in March, because there was a much deeper decline. Just talking about relationships. So the semis have had a year in which to start changing their mentality that those fantastic earnings would be repeated again. This is a slow economy all around the world. There's no question about it. Certain sectors are doing very well. So this is, I'm not sure how it works out that I didn't read reports or anything. I'm just listening to the fact that they had blowout earnings, especially Xilinx. But at the same time, I'm looking at this and I'm saying, why is the market so dull? This should be a very good sign, because it says at least it's maybe the internal low for the semis. They can make another low, but it could be a higher low or lower low. But this is a really good start. Look, it avoided the arch formation here. It's an extension of the cup formation. In fact, it's an extension of the cup formation going all the way back to the 99.13 high. 114 was the major high. But this last high that was made right as December was starting at 99.13 down to 80, you've got yourself quite a spill there. Hey, this is 18, 19 points. Oh, man. But all of a sudden, it comes back, roaring back. That makes a nice V-shaped pattern in the weekly, especially since it hit the 200-period moving average. My thinking is still not quite changed. because this is still just a really good bounce. If you look at the weekly and the monthly, yep, it's a great bounce. But look at the Dow. On the right side chart, that's the monthly. Isn't that a much better candle, this green candle of January? Look at the QQQ. Not a nice pattern at all. But isn't this a better candle? So I'm watching this and I'm saying, okay, really good start to this first quarter to hear that news. Are they able to repeat it? I'll hear a lot more tonight. I'll be meeting with someone who knows the industry very well. Playing tennis, actually. Or maybe we'll just play tennis. We won't talk. So, IWM. IWM is trading at 145.56, up 96, hitting this inside. So let me explain this because I like to do techniques here. This is a Chapman wave falling axe formation. There's a trend line resistance right there. Went to the high at that peak C right there, right there. So the high that was made on the 8th of November in the IWM Russell 2000, that was at 157.90, it's called in the 157 area, comes down with lower highs, much lower lows. So draw a trend line there, a deeper trend line here. It's falling axe formation. You need to see over the next, it's a daily chart, I would say over the next 7 to 9 sessions, not a move under 140, but a move under 149, 150 to 149. So you can try to touch the 153 200 period moving average. If you look at the MACD in the daily, that's very good. Stochastic went from the 93% now to 86%. So you've got to watch that carefully. It can make it could take a dive. Then we've got to watch the weekly chart for a single leg A failure pattern. All right, let's go to gold. Gold was down deeper earlier. Now it's down 4. I've got gold. Well, let's just talk about the rectangle formation. Rectangle formation can last a lot longer than your patience. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. About 14 sessions since the recovery high of 1300.40 back on the 4th of January. Let me see if that's been smoothed out. Yep, 1300.40. And then the low that was the key low, we haven't closed under it right now, was the same day that you made the high. 1.278.1 is the, so 1278.1 is the key low. We touched it 3 days ago. We went 1276. Next day we went to 1277. Today we touched 1275.3 actually. So when I look at this, I'm saying now we're out of the rectangle. Theoretically, that's what happens with long rectangles. We were looking at that yesterday during the day in one of the rectangle formations. As I was talking about it, I said the theory with this is, for me, is that at some point it could go to a slightly high, but it's going to come back into the range. But there's a greater chance it's going to break the low. And when it broke the low, that was that move from 10 o'clock, 10:15, 10, oof, came down. It was like 1,300 S&P cash to the downside. It was amazing. About 300, about 30 points. Yeah, it was very deep. All right, so let's get back to our story here. So gold is acting okay, especially helping the weekly chart, but it is starting to break down technically. It could change, but the technicals say just it's going to need a little more time to improve if it's going to improve. Silver has for a little while now. I mean, to put this in here, there's a down arrow. Everything fits for a down arrow, and that's it. So it gets a down arrow. Gold and silver dailies are in sell modes. The weekly charts are in buy signals, but tentative right now. I've got to wait for the week to finish. A lot's got to happen. So it hasn't broken down, but it's really not acting very well after that single leg up, that really big leg E with a long-legged doji breaking the bottom. Got to watch it. The dollar had a spectacular move earlier today, and then I think it dropped. I saw it at the lows, and now I don't know where it is. Now it's at the highs. So near the highs. The dollar's at 96.50. I mentioned this yesterday when we were doing the webinar. One of the Chapman wavers said, hey, wait, isn't there a very quick peak A to peak B to peak C to peak D? And I said, yes, it is. But remember, the reasoning behind it is that you could see a pullback it doesn't mean you make a major top. It just says the rule of thumb is that the quicker you can go, especially B to C to D, means that immediately when D starts to pull back, it could be quite sharp, but it's not a sell signal. You still maintain the major signal. In this case, it's a buy mode. But the buy signal has gone to a buy mode in the daily. The weekly is still just stuck in a buy mode, having had a pretty sharp pullback. Technically, it should be on a sell signal, but you can't mix. I don't want to mix metaphors here. So it's in an uptrend, still in an uptrend. It's above the 9 period, above the 14 period in the weekly chart. MACD's lousy and stochastic's lousy, but it's holding in the monthly chart really well. I still think the dollar is the play for so far in 2019. I think big countries, or not big, countries rather than big institutions are buying the dollar. That's just the way it looks to me. And I have no way of proving it. I don't know how anyone could prove it, but it looks good right now. I'll be right back. Dow's down 36, S&P's up 0.76. Basil Chapman, Tiger Technician.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Last night, and I don't know this person. I'm not sure if maybe I've heard of them. I just don't know. And it says, hedge fund billionaire Ken Griffin closed a deal to buy the most expensive home ever sold in the United States, paying around $238 million for a New York penthouse overlooking Central Park. The deal is the latest in Griffin's unprecedented global shopping spree for real estate. So the reason why I wanted to bring this up is that some of you might recall that I spoke about this starting last summer, I believe it was, as we're talking about the next phase of the coda. I call it the coda phase, where coda phase has been split into 3 sections. We finished 2. We've got 1/3 to go. I don't know the timing of the whole thing, how long it'll last, but this third one is the one that when Berlin wrote was it Cole Porter or Berlin? Anything Goes. That was in 1930, in the early 1930s, and Anything Goes kind of was summing up what had happened previously, where you could the prices were out of sight, you could say anything, you could everything was acceptable, and we're in the period right now of anything goes, anything. In fact, I don't want to get into it now. There's plenty of time. I'll talk about it. And I always say I'm going to get into trouble for it, and I haven't yet gone into trouble for it. Maybe this time I will. It's just an observation I've made. It's a qualitative thing. It's not pointing fingers or anything. I'll talk about it at some point later on. But in terms of the populace, remember when the so-called safety of bonds, where the expression was that the broker will put the grandmother into something that's really safe, like bonds. And who were the people that were right at the end in 1999, early 2000, selling their bonds, skipping the idea of going from bonds to maybe preference shares if you want to get into the stock market, and then maybe the shares of the most conservative companies. And then if you feel comfortable with that, you can go a little more aggressively into the more higher PE. And then when you're really good, you can go. No, they skipped that entire thing, and they went from bonds, and they put their money into AOL and all those stocks, the bubble stocks. So when I'm looking at this, I'm saying to myself, all the requisites are here. 215 for, I don't care what it is. It could be a 5-story penthouse. Whatever it is, my expression a year ago was that at some point, get used to it. The real estate market is going to start to tank. That is, real estate market in Brooklyn, in Boston, in Brooklyn, in Manhattan, when it comes just to general real estate. But the best of the best, the iconic things, are going to go for prices that when you look around, you say, didn't someone just pay that for the entire building for a skyscraper just a couple of years ago? Now somebody's paying that for a penthouse? That's where we are. And that's really important. That's part of this whole phase. I'll get into more as we move on. Didn't even want to waste that kind of time, but it was such an important thing. I'll show to my subscribers tomorrow. We're just making a compendium of all these things. Actually, I'll say that. I haven't kept, I don't know where any of them are. I just put them out, and someone hopefully is just keeping some of these iconic blurbs that are going to be part of what we look back on when the market makes its really big top, way higher than we are now, right now. We have to get through some tough periods first. All right, enough with that. So the dollar's acting very well. The reason I got to this is that I think countries are buying the dollar as a safety haven. They're not buying bonds, they're buying the dollar. Hey, how am I going to prove that? I have no idea. But that's what it looks like, because gold, when gold was rallying like that, the dollar just took a breather. It didn't really tank. Look at the monthly chart. It pulled back a third of the big move from 88 to a 97, pulls back to a low of 95. Hey, I'd say that's pretty damn good. Okay, enough with that. Let's move on. EUR, USD, EUR, USD, big peak F, pullback. We're looking at the pattern that I called the Eiffel Tower yesterday. It looks like an uppercase A. Boy, is this an Eiffel Tower. From the low just on the 3rd of January, we're at 1.13. On the 10th of January, we, meaning the euro dollar, is at 1.156. And today we make a low of 1.13 so far, 1.13. Wow, look at that. 1.129. Unbelievable. All right, so let's look at the USD JPY. It should be running just a little bit. Let's see if it is. Yeah, a little bit. Yeah, so it's going to a peak C. It's the dollar. I mean, people, I'm someone point out where I'm totally wrong. I'm always up for that because nobody can be right for all these different things. So if I'm wrong, someone tell me where I'm wrong, why the dollar is holding under all these conditions. I tell you why I think it's holding up. I spoke about this 2 years ago. I said at some point, I believe that just like the yen was strengthening when Japan was on top of everything in the 80s, going into the top that it made in 1990, so currencies tend to reflect the economic conditions, and we are having good, whatever you read, the economic conditions right now are still better than they've been in a long time, and that's being reflected in the Dow and the dollar. That's what I think. So, all right, enough of that. Let's get on to the high-grade copper. So this is very interesting to me. High-grade copper is stuck at the bottom of the range, is acting very poorly, and that is opposite to what you were looking at when we showed this chart to subscribers over the weekend. I always show wood, which is WOOD. That is the global. Hey, how come I haven't updated it? Oh, that's because I did it on the other chart. So this is iShares Global Timber and Forestry ETF. It goes from 83.88 to the low of 55.06. 55.06, I think, on the 26th of December. I would say that that is a little bit of a tumble, right? 55.06. So it had a terrific rally. In fact, it made a little Chapman wave two-bar reversal, and then went up to peak A, peak B, peak C. It too, like the SPY and the others, it needs leg D. It doesn't have to have it, but I think it will make it a leg D just above 63.80. Now, this is opposite to high-grade copper. It's not totally, because it still looks terrible. It's just gone in the weekly chart above the 200-period moving average of 62.23 when it smashed under it to 55.06. Monthly chart looks terrible, but it looks a little bit better than high-grade copper. So this is going to be very interesting. What happens? Is there some kind of, Freeport McMoran, let's see what that's doing. FCX trading down 1.13, down almost, 9% at 11.18. Chapman wave methodology, it went from a low of 9.50 something to a peak A, peak B. Always looking for a D, and then other things can happen. Peak A, peak B. Is that a D by penny, by a penny? No. 97. Okay, so it goes to a peak D right there at 12.5 something, and then it turns around sharply. I can't put a down arrow yet. I could maybe at the end of the day or tomorrow, because the MACD hasn't crossed negative with this, and the stochastic's at 86%. Price-wise, that is definitely, I'm putting it in. A peak D pullback. 11 point.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Let's look at the TLT, and that's bonds. That's essentially the 20-year Lehman bond fund. It's rallying. So I've been saying that if the market is going to see money come out of the TLT, out of bonds, back into stocks, that's going to help the market. So when I put this together and I say, wait a minute, we're in a little leg B here after hitting 123.86 on the 3rd, coming back down to 119s on the 18th, only 4 points, but that's big. I mean, it ran up sharply, but it's come back. And now back at 121.11, my contention that yields are stuck in a range, so with a chance that if money comes out of bonds, yields go a little higher. Fed would like to see that if it's done quietly. Money should go into the market, and yet we've got the semiconductor index up really sharply. Part of the economy, remember, I moved over to looking at copper and then wood, the iShares, the timber and forestry ETF worldwide, global, because I was looking at those macro scene, and the macro scene says to me, bonds are holding okay. If they go, if there is at any point in the next 2 weeks a move above 123.86, that would help the monthly, not just the weekly chart, because that would go to a leg D, but that would help the monthly chart, MACD, actually cross positive. Once it does that, you've initiated a trigger point that says that money could start to flow out of, so how can I put this? I try to do it succinctly. If the bonds rally, money comes back out of stocks and goes into the bonds. That's kind of what happens. So this is a very important period for me, that this SMH rally of 5 points, 95.21, really good, but it's still only within the context of, hey, if I'm looking at the chart, it's just another good candle. It's not great. It's just a very good candle. But it's telling me that somewhere there are starting to be points of contact where prices have subsided in the industry and have gotten to a point where there is demand. And if this is saying to me that the semiconductor is just starting to see a bottoming in the process, I discussed this before. Remember, someone told me in the industry a while back that they can see that there's huge profits that were made for 2 years, and many companies had extrapolated from that and projected, like economists do, that the line would keep going straight up. He said, I don't see that at all. I think there has to be a big slowdown. So this slowdown has obviously been taken in place for a year, not a year, about 9 months since March of last year, technically in the industry, and that only makes it stop when the news has already changed. So that says maybe we've just started a bottoming process in chips, because chips are in everything, and chips are in more things and more in more numbers than ever before in history. So let's see. I'll get more information. I'll talk about it tomorrow if I can. Okay. So in the meantime, back at the ranch, my big surprise is that it's not really impacting the market as much as I thought. That's my big point. Boeing, a couple of questions coming in. Let me just go there. Boeing holding quite nicely, up 2 at 360. Goldman Sachs, let's see, up one, just over 1 at 198. Peak C, just like we were looking at Boeing. Let's see, what else would I like to look at? Intel, I think that comes out. Earnings come out, right? Very soon, maybe today or tomorrow. Intel, leg D had a big spike to the upside of 1.72, helping the Dow. So what's hurting the Dow? Let me just quickly check if I can. Let me go to this program right here. There it is. Okay. So I'm going to put in Dow. IBM down 72. IBM had a spectacular day. UTX down $1.81. It was great yesterday. What is moving the Dow? Oh, so yeah. So now you've got the IBM, UTX, and Procter & Gamble, which was spectacular yesterday, which helped the Dow, and they pulling back sharply. Okay, so that's ameliorating some of it. And you've got J&J, same thing. Let's see what J&J is doing, because that's part dollar, right? The dollar is important there. J&J, ugly chart. A, B, C minus, arch formation. Made its all-time high at 148.99. Beautiful cup formation failure pattern. Wow. So let's see, and within the pharmaceuticals, Merck is down 2.5. Okay, same pattern. These guys are taking a breather. That's no question about it. All right. So now I can understand things a little bit better. Let me go to one thing, final thing, and that is crude oil. And I'm mixing in questions that I've got sent to me as well. Peak D in the crude oil, mixing a left side, right side, price time match. Yep, just it didn't quite get to the 55 area. It went to a high just over 54 3 days ago, holding at 53.17. I want to see crude oil rally. I want to see crude oil rally. I want to see crude. Why? Because it's going to help with wood, iShares Global Timber and Forestry. I want to see this as a sign of economic strength. I don't want to see it plummet. Hey, how about those airlines? Let's see the XAL right here. XAL is, okay, it's just $1.81 at 100.36. So it's in the daily chart. It made a peak D and then it plummeted. This goes to A, B, C. Yep, Doji D, taking a breather. Pretty nice action, actually, considering that oil did rally quite sharply from the recent lows. This is held very nicely. So the monthly chart is not great. Weekly chart is improving. I don't know what that G is. There's no such thing as a G. Oh, EF. F was there. That should be A. That should be G/B. And that's C. Okay, G/B. And this, I think, is a C. I don't know. I just done this real quickly. Okay, so ARC Airlines, AAL, is up $1.53. So individually, some of the airlines are doing very nicely. They're coming off recent lows, and they really got smacked very hard. So I had a question about CCR. CCR is coal. Coal reserve made a peak D, made a low of 14.52-ish or something. Rallies all the way to 17 point, is that 87.93, 17.90 on the 9th of January, and making a cup formation, made a peak F in the weekly chart at 21.13. Week of the 9th of November, as I say, it plummets down to the 14, what it was exactly 14.58 level, trying to rally. So let me look to see. So the comment was, oh, look at that. Coal, huh? If you don't mind, I'm just going to look at KOL. That is, as I recall, the ETF. Coal, ooh, big gap. And it goes to peak A, peak B. leg C, and peak C. All right, so at peak C and the weekly chart, this is not great action. So let me do this. I'm just going to say, Cole, this one is Oliver Janet J, Mr. Cole. Okay, so this is not Nat King Cole. This is CCR. And really nice rally off the low, 14 to 73 points. That's a big percentage. You know what? I'm going to take a little time. I think this is worth looking at. It's in the coal industry, which has been under pressure. I'll be right back. Dow is down 76.
Great moments are born from great opportunity. And that's what we have here, folks. The opportunity of a lifetime for most. I'm Steve Rhodes, the 2018 Market Timer of the Year. And on Thursday, January 24th at 4:15 p.m., I'll share with you what I see as the next great buying opportunity. This free workshop, sponsored by Ninja Trader, is available to everyone. There's no gimmicks, no credit cards, no lengthy sign-up, and you don't have to be a subscriber to my award-winning daily newsletter service, Mastering Probability. All you need is a name, email address, and contact number. Just click on my name on the homepage of TFNN.com to gain access to the live or archived version of the next great buying opportunity. Folks, everything in life happens for us, not to us. The fact is, this workshop is happening for you so that you can learn how, why, and when to take advantage of the next great buying opportunity. Timing is everything. So sign up today on the homepage of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
I overlapped. I had a chart that overlapped my callers here. I got a caller, Mike in Ormond Beach. We'll go straight to Mike. Mike, how are you?
Hi, Basil. Forgive me if I'm asking you to repeat yourself, but what is your view of the S&P 500 for the next few weeks? I thought they possibly said you think maybe it will creep a little bit higher, and then at that point maybe make some kind of a intermediate term top, and then go back down and test the lows.
Mike, let me deal with this because we've got very brief time. I'm going to do a lot more tomorrow. I wouldn't mind even if you want to call me tomorrow, but I'm going to do it tomorrow as well. But let me explain. I'm looking at this, and it's really important that I assess what's going on with the semis right now, that it didn't affect the market positively, which it should. That's number one. Number two is my assessment of the S&P is that we're going to chop around now in a trading range, a frustrating trading range between maybe 2,710-ish maybe, and with really good support, probably around about 25, 20-ish, something like that. A wide range on a short term, but really not a big range. And then a whole plethora of bad news comes out. I'm thinking maybe either end of January, maybe the first week or two of February. That's where it starts to come down. That's where we get the big test. I'm also looking at all the conditions that they're the same conditions that were here on the low of December the 26th when it went to 2345. And I'm looking at nothing changed. So I don't see a catalyst yet for a really big move to start the big move to the upside. I do see catalysts to have a test of about a 50% retracement down from where we've come. That would put us somewhere in that 2,500 area. So I'm thinking later on, sometime maybe in February, that's where we get the test. Some indexes are going to retest and break the low of December. Some are going to hold like a rock. And the sooner everything gets together, we start moving higher. I'll do more on it tomorrow, but that's my thinking. Hope it helps you.
Yes, it does. I'll tune in tomorrow. Thank you, Basil.
Thank you very much. Great call, great, and great that you're going to be able to listen tomorrow. I'll do it again tomorrow. Thanks for being here, folks. Don't forget, Steve's coming up, and he's also got a webinar this afternoon. Check out front page of TFNN. Dave White coming up, and then Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.